All right. Good morning, everybody. My name is Mark Hodge, head coach at Rockwell Trading, and let's take a look at what's moving the markets today. It is July. Gosh, I did this yesterday too. July 15th. So I know what's moving the markets. I might not know the date, but it's July 15th, and I want to cover the big news, what's moving the markets, what you should focus on as a trader in the next 15 minutes. Let's take a look at the charts, get right into it, and see where we're at, what happened yesterday. Now, the S&P yesterday made a new record high, closed below its record high. So pulled back a little bit after making a new record high. Dow made a push higher, didn't quite get to its record high that was set back in May, but closed below. It set a new record close 2 days ago and closed below that. So still flirting with all-time intraday highs and down a little bit below its record close set on the 12th. And the NASDAQ really just opening strong but pulling back yesterday. This morning, it looks like we're setting up for a slightly lower start. The NASDAQ futures are flat. The mini S&P down 0.3%, and the mini Dow futures down 0.5%. So Dow taking a little bit of a bigger hit in pre-market trading. Dow futures pointing to a lower start, mini S&P slightly lower, and NASDAQ really just flat. Now, Fed Chair Jerome Powell was in the spotlight yesterday. He basically said that a full recovery in the U.S. job market is still a ways off. So the Fed is unlikely to make a rate adjustment anytime soon. And that kind of prompted some of the movement that we saw yesterday, even though PPI data came out much higher than expected. So there's still, inflation concerns. And of course, is it transitory? Is it not transitory? That's what traders are trying to bet on. And it's interesting because I talked to one of our coaching students who, for his business, he buys fabric. And pre-pandemic, he was paying $1,200 for a container, a shipping container of fabric. And I want to say it jumped up to $3,800 a container. I think he said it was last June. And most recently, he paid $8,500 for a container, right? So in basically a year, you go from $1,200 in material to $8,000 in material. This is just one example. My concern isn't that these extra costs and this bottleneck in shipping and distribution isn't temporary, but how long will those higher prices last? When will traders and just businesses decide to scale back on those prices, right? Because it's not like, oh, prices are $8,000. Let's go ahead and give you that $1,200 price now that things are better. I think it's still going to take some time. I know that some investors are viewing things the same way, but it looks like the bond market anyway. Gosh, US 10-year. Oh, that's not the one I want. Let's try that again. There we go, US 10Y. This is dropping, and this is one of the reasons why today some of the futures markets are down, but the NASDAQ's kind of sticking right at break even, because with the US 10-year yield falling, this can help growth stocks. And it's really a sign that bond traders anyway aren't as worried about those inflation costs. So this is, we're kind of getting mixed signals here. At any rate, today, U.S. weekly jobless claims was released, and this was a good number here, with 360,000 Americans filing for unemployment for the first time last week. This was a pandemic era low. So last week it was 386,000. The forecast was 350, so just a tad higher than expected, but still below last week's levels. And gosh, a pandemic or post-pandemic low. We see where we were at, just April 1st, 719,000 people filing for unemployment back in April, that just being 1 week. And this week we have the lowest number we've seen going back to March of 2020. So some good news there on the jobs front. Let's see what's going on with individual stocks. And earnings continues to be in focus. Banks reporting earnings this week. So we have Morgan Stanley, MS is the ticker. So Morgan Stanley Investment Bank down 1.3% pre-market. Now they reported better than expected earnings. Their earnings per share was 20 cents better with a report of $1.85 per share. They also had a revenue beat, but this could be more. This lower start today could have more to do with bond yields because banks in general are down pre-market. We'll take a look at a few more, but let's also look at U.S. Bancorp. USB is the ticker symbol. Now they're up 0.8% pre-market. They also had an earnings beat. They reported $1.28 per share, which was better by 14 cents. They also had a beat in revenue. They said that their numbers were helped by an improving economy, which boosted credit and debit card revenue. So the improving economy helped with those numbers, and it also put less pressure on their reserves for defaults. Let's take a look at United Health Group, UNH. So United Health Group down 0.7% pre-market. They actually saw their profits fall by a third compared to last year, but they still reported an earnings beat because $4.43 per share was expected, and they came in at $4.70. So their overall profits are down compared to a year ago, but they did better than expected, down 0.7% pre-market. Now, I mentioned that banks are taking a little heat. That could be a little bit, or that could explain a part of the dip in Morgan Stanley. Let's take a look at Bank of America. So with falling bond yields, this is putting some pressure on the banking industry because when you have yields rising, they can make more profits that way. Bank of America down 1.2%. I actually have some puts that I sold on Bank of America this week at 38. So we'll see what happens there. Even with the drop, things are looking okay. Let's look at Wells Fargo, WFC. Wells Fargo down 0.9% pre-market. We could look at JP Morgan Chase. JP Morgan Chase down 0.7% pre-market. So banks looking at a lower start as we head into the open this morning. Let's take a look at a few other movers here. Delta Airlines, DAL. Delta up pre-market. They're trading just shy of 1% higher with pre-market trading. They received an upgrade from Raymond James, so that could be contributing to this higher start for Delta. I wonder if that is carried over into other airlines. No. So American down 0.6% pre-market. We could look at United down 0.6%. So yeah, Delta standing out right now. It appears as though that upgrade is helping Delta where other airlines are down a little bit pre-market. Another mover today, let's look at Netflix. Now Netflix, is this no, not quite yet. I was wondering if we were looking at record highs, but no, it looks like we had some support or resistance in Netflix, maybe around 565. Looks like a record high is up at 593. Either way, Netflix getting a little boost pre-market, up 1.6%. Now, Netflix, they announced that they have hired a veteran gaming executive, and the goals there is to really tap into the video game market. So they've done a great job with movies and streaming entertainment, and it looks like they're really putting some more emphasis into the video game market for them, and up 1.6%, while NASDAQ stocks are flat and the S&P and Dow futures are down a little bit. Looks like traders are liking that decision. Oh gosh, AMC, maybe meme no longer. AMC down another 4+% pre-market. AMC been, they've been taking a bit of a beating, down 4 days straight, and actually down 8 out of the last 9 sessions. So, the deal with AMC just taking off, huge run up in just a matter of days when it became a meme favorite, Reddit favorite, and after moving sideways for a little bit, it's just been sliding. So it looks like AMC is trading around 32 ahead of the opening bell. We'll see if this slide continues once U.S. stocks and U.S. markets open up. All right, a deal that went through. Let's look at AIG. AIG up 3.9%, so getting a little boost pre-market. And Blackstone, BX is the ticker. So Blackstone Group up 1.9%. Looks like it's not quite at record highs. Looks like it set record highs on the 13th, 2 days ago. But the deal is that AIG is looking to sell 9.9% or a 9.9% stake in their life insurance and retirement services unit to Blackstone. And I think they'll be managing some things there with that stake. So Blackstone and AIG getting a boost, which is interesting. Sometimes you have a deal like that and one company is benefiting more than the other, at least from an investment standpoint. And today, both Blackstone and AIG moving higher as we head into the open. Now, another, well, not a stock, but let's look at crude oil futures. Crude oil futures down 2%. And this run up here, I mean, we see that this has been going on pretty much all year. But recently we had this run up because of some disagreements with OPEC Plus, specifically the United Arab Emirates and their desire to restate some of their numbers that would be beneficial to them. And Saudi Arabia and Russia in particular said, no, that's not going to work. So the idea that there could be some conflicts with OPEC sent crude to a record, not a record high, sorry, but a highs of the year. And since then, it's been really choppy. Yesterday, crude oil dropped and was down 2.8%. Crude oil down now 2.2%. And this is over some conflicting reports. It sounds like there could be a Saudi Arabia and UAE compromise on production levels. And I did not see that that was actually verified, but there were some reports on that being the case, and it looks like crude oil traders are responding to that. So crude oil looking to trade lower for the second day in a row today, and we'll see where that ends up. So once again, heading into the open, NASDAQ pretty flat. The mini Dow futures, the bigger hit this morning, down 0.5%. Even the S&P also lower. We'll see what happens when we hit the open of the U.S. markets. Earnings still looking good. Earnings strong, even though some of these companies are down a little bit pre-market, and looking for a nice trading day today. So I need to pop over to our virtual boardroom with our mastermind group. For mastermind members that are watching, we'll see you there. If you like the video, please give me a like. And until tomorrow, happy trading, everybody.